All right, welcome everyone to LeapMeet 84, October 2022 TradeLog review and technical analysis. So let's just get started. I will try and keep it as short as possible. Let's take a look at last week. So this is the week in SPY that we have had. Pretty much it started right here, I believe. No, right here on October 31st. So first 2 days, it ran into this 100-day resistance here. And then as we got more data, FOMC was on Wednesday, and then more data coming on Thursday and Friday. And we saw this huge pullback towards 372, 373 level right here. This is where the support was expected, and it did found support there where it has before, as you can see right there. That is where it tried to bounce. It touched that on Friday and then bounced back up. On QQQ, similar price action, sideways pretty much Monday, Tuesday, big pullback. Wednesday and then Thursday, Friday pretty much held on to the support level right here at 260.50 and then closed higher at 264. Friday was very volatile. It opened green and then pulled back all the way to 260.50 support level and then bounced right back up. I did see SPY and other name go from being $4 or $5 up to pretty much red and then bounce back to $4 or $5 up. So very volatile day, and we took very good advantage of that volatility. We had like about 6, I believe, 150% plus trades, which is fantastic to get that kind of volatility and price action in just one day. So that was the last week. So let's talk about previous month of October. Month of October started pretty much here, as you can see, moved up, probably like first week, pulled back down, all the way down to 348. This was the end of second week, and then even though it opens so red, it closed very green. We all remember that day where market pretty much ran up and broke some records. And then from that point on, it continued to move for about the next 2 weeks. So in terms of volatility, there was quite a few volatile stay there, as you can see right here. This one as well. But in terms of definite direction, there wasn't any. As you can see, like it went up, pulled back all the way down, and then went back up again. And then when market has no clear direction like that, it's very hard to trade. And you have to take one day at a time. You cannot buy calls that are like 2 weeks out, 3 weeks out, or even 1 week out for that matter. Because if, let's just say, if you bought like calls here thinking that this trend is going to continue, you would be sorely mistaken. If you bought puts here for next week thinking that we are starting to break lows and we're probably going to go lower, again, you were sorely mistaken. It started moving up and then it broke over this downtrend and you thought that, okay, it's going to go up, and it pulled back down. By the time it gets to that level, your calls are expired worthless. So it's very hard to plan 1 or 2 weeks out in advance. And I've been saying that pretty much entire year this year, that this price action warrant for 1 day, 2 day, 3 day at a time kind of trade planning. You cannot move ahead. Whereas this one, as you can see here, even though it was very volatile, the general direction was up. Right now, there is no general direction, like it's all over the place. And here, if you see, like, because it was a bull trend, like it would move for like 2-3 days down, but then it will move up and then it will move down for a little bit and then move up again. Whereas this one, it goes down and then it move up for 2-3 weeks at a time and then pull back down. And then here it would move up for a week and then pull back down. Moral of the story is as you can see here, even on the down days, it doesn't move that much. Whereas here, look at the range that we are having. So once it goes against your trade, your direction, with a huge margin, there is impossible for it to recover because the loss of delta and IV is so extreme that it's pretty much done. Like if you recall, and it goes like this huge candle down, there is impossible for it to recover in time. Whereas this one, like very small candle, like look at this pullback. So if you were to buy calls here, look at this pullback, but it would be like break even at least. You would have many chances to get out. Whereas this one is like hit or miss. Same thing with QQQ. Look at the range we are having for each up and down move. Whereas look at this one, like fairly consistent. Yes, we did see some fairly volatile last year, and that's when everything pretty much started going up in a huge range after this was the volatility that came after this huge run up. So it was kind of expected. Whereas this one is just a clear-cut downtrend, and we're still in it. As you can see, this upward trending, this downtrending trend line right here is still very much intact. Right there. So that downtrend is still very much intact. We do see, like, I personally call it like semi-trend, and these are the semi-trend right here. The semi-uptrend, downtrend, semi-uptrend, and then this is a downtrend. But the overall trend since last December 2021, we are pretty much 1 year in now, and it is downtrend for sure. So we have to keep that in mind trading, and that is why one day at a time makes sense right now. All right, let's take a look at the October trade log. This was our September trade log. We took about 69 trades, 61 wins, 88% success rate, 700% plus win. Whereas this time around, our success rate, because of the volatility that I pointed out, was a little bit lower. We came in at 83%, 64 total wins, total trade 77, 13 losses, but this time around we had about almost 1200% plus trades, so that was fantastic. Week one started out great. As you can see, if I go back to SPY or QQQ for that matter, October started here. So week one, everything pretty much was moving up, and then on Friday moved down. So as you can see, not that one, this one I'm gonna close out. Week one, we started off slow to only 2 trades, and then decent 17, 70, 32% win. Decent days, and then Thursday and Friday when we had a definite direction, which was, let me just zoom in, so which was down right here. It moved up on Thursday, open green, and then pulled back down, close red. And then Friday was a big day down, and we made most of it on Thursday. We had 300% plus trades, and we traded in both directions. Google 101 put, 103C, one Nvidia, and then come Friday, we still had a few, maybe 300% plus trade, but we did take some losses in Microsoft, Tesla. They being volatile, this is like a lot of trades, so it was kind of expected. If you were to follow stop losses, it would have been good. But when you're trading lotto, you plan for 100%, like make or break kind of things. Like if it works, it works. If it doesn't work, it doesn't work. But in our case, we made some good, even if you take out this 200%, and let's just say it would equate for this 200% right here, that this win becomes 60%, 68%, 155%. So very good day overall, and very good week overall as well. Week two, when things started getting a little bit choppy, in the sense that the first 3 days it moved down, and then we saw this huge red day that changed direction and closed green, and then there's another highly volatile day. What did we do? We took it very cautiously and slowly. Three trades, one trade, small positions overall, couple of losses, 3 losses overall. We did follow stop losses here for Netflix. Google was a small position to begin with, and this was the lotto as well. So decent week again overall. Netflix played really well here, but decent week overall. I wouldn't say fantastic, but we did manage to get some good trades in. Stop loss again was the issue on Thursday and Friday, but we're working on trying to follow it. But like I said earlier, once it goes against you, there is no coming back, and it's just, there's nothing you can do at that point, and you just let it go to zero. Come week 3, this was the definite week right here. So after this, another pretty much choppy week, small range day, and then pretty much sideways movement, big ups and downs in the price action, and the similar story, we just moved sideways. So we traded what we could, got some good trades overall, some really big win in 244, 105, 130%, but we also see some good losses that week because there was no certainty in the direction. There was no direction. It was, everything was moving sideways. So puts, calls, puts, calls, puts. So we lost on both ends. So this was, I would rate this as like a B week, because basically we had 4 big losses and 5 in total for that particular week. We kind of pretty much came out of it break even, I would say, but we did, if you were to follow stop losses here, you would have come out winning this week as well. But we did see some big losses because of this uncertainty in which direction it was going to go. Come week 4, and week 4 was here, right here, moved up, moved down again, and then pretty much ended the day on a big green in anticipation of FOMC week. Again, another directionless week, gave indication of breaking higher, failed, pulled back, and then came back up again big time. We did good first couple of days when there was a definite direction, and we did think that it was going to go up, and took the losses on Wednesday. And then Friday, again, when it picked the direction, we made most of it and ended the week pretty good. Lots of green trades, 3 red trades, not that big of a deal. This one was, we followed the stop losses from Netflix, Microsoft, Nvidia was a lot of trade. Microsoft, once it dropped, it never recovered. There was no coming back from that. And yeah, that was it. So another decent A week, I would say, where we did make some good profit. And then week 5 was pretty much one day on 31st, where we made some good trades, all green. Overall, like I said, 83% success rate, almost 70% loss. 100% wins were like about 16%. Total trade 77. If you were to follow every single one of them, I know it's unrealistic. You would have made about 4,700. If you missed half of it, still you would have end up with 2,000. If you follow this $10,000 position roll, then that's what you would have done. So overall, pretty good week, I would say. Pretty good month. Excuse me. Pretty good month, I would say. We had some very great week. As you can see, the first week was just absolute crazy. We had 6 green trades in 2 days. This month, November, we had that many in a day. So we started off pretty great, and that is the fantastic thing about the market, that there are days and weeks where you can recover all of your losses and make more. There are weeks where you just have to stay in the game. There are weeks where you take losses, and that's just part of the game. But the key thing here is that you have to stay in the game to win the game. If you, every time you take a loss, every time your account goes lower and you quit, that is when you lose the game. But as long as you remain in the game and keep at it, there will be days where you would make up for most of your losses, if not more. And that is when you learn your biggest lesson on what to do, but also what not to do, and what works, what doesn't work. And there will be a day where switch flips and everything will just start clicking. Nobody in the trading business has seen success without seeing failure. Nobody, absolutely nobody. If someone tells you that, oh, I started trading and found immediate success, they're lying to you, and they're lying to themselves. But so that's one piece of advice that I give everybody, and that just stay in the game. Like that, it took me about 4 years to be profitable and 5 years to pretty much recover half of the debt that I took to start this journey. And now I make that in a day. So that should tell you something. Time, persistence, and patience is what it takes to make trading your second career. Anyway, let's get ahead. So we're just going to do a quick technical analysis. There is not much to do here. As you can see, we are near the pullback. And the reason there is not much to do technical analysis here is because market is so uncertain, and there are so many news and events coming out. We are in the middle of the earnings season. FOMC just went. We got non-farm payroll. The CPI data will be coming soon. So amid all this, technical analysis can only help you a little. What's going to help you is basically taking it one day at a time. Nobody can plan for it. If you go crazy, like some people pointed it out in our room, that in other groups or chat rooms or whatever, people are going crazy trying to figure out what will happen, what to do, plan it, all that sort of stuff. They are trying to do it. And in our room, we weren't doing any of that. We were not looking at hundreds of indicators. We were not trying to go crazy, figure out what will or will not happen. Instead, we enjoyed our downtime. And then when the time came, we put the hammer down. We reacted to what was happening, and ended that day with 600% plus win trades. That's what we do. You can't plan for it. I've been telling it again and again and again and again, and people don't seem to listen. People don't seem to comprehend that. I've been in the market for 12 years now. I know these things. I have been through many of this FOMC meetings and interest rate hikes and CPI data, all that. I haven't been through a recession yet. I wasn't trading in 2008. I started in 2010. But in all of my experience, one thing has stayed in common, that stock market has tendency to do exactly opposite of what you have planned for. So I would rather not plan at all and just react to it. And if it can give me 600% plus trades in a day, I'm happy with it. I have no problem just not sounding smart or trying to figure out. I've traded with every indicator that's out there, and I still prefer to just trade with support and resistance level, because that is what consistency is. That is what gave me consistency. That is what made me profitable. And that's what you should be doing too. I mean, if something works for you, go for it. There's nothing wrong. Like I always say, there is not one single right or wrong approach to trading. But this is what works for me. So I'm not gonna spend, like, pull my hair out trying to figure out something. Anyway, so that same goes for this coming week as well. In terms of financial data, let's see. I mean, economic calendar. This week, what do we have this week? We have election on Tuesday in US midterm elections. That should have some effect on the market. And Thursday, we have core CPI coming for October, and that is going to be a huge, huge deal. Initial jobless claim is also coming. And Friday is Veterans Day holiday. I'm not sure if the stock market is open or closed. Anyway, but yeah, CPI data is Thursday, so I would expect Wednesday, maybe Tuesday, to be super calm and pretty much trading sideways. It's like how it did before FOMC. So again, planning for it is not going to work. Technical analysis is not going to work. What's going to work, and what has worked for me days after day, is basically reacting to what market does and playing with the levels. Anyway, so we are right at the support level right here. If it breaks 260.50, then expect it to go to 254. And if it breaks that, then we will make new lows. We are not too far from the lows where it decided to bounce. And the same thing goes for SPY as well. But SPY lows are a little bit further than QQQ, but we are still near support level. So this week, 370 is the level going that we'll be watching on the downside. If that breaks 364, 358, 359 can come next. 350, if CPI data comes hotter than expected, then expect market to pull down, because that would mean that economy is stronger than expected and could handle more rate hike, and that will give Feds more leeway to do higher rate hikes, basically. So that will be a bad news for the businesses, because higher the interest rate, you all know the drill. But that will definitely pull the market back to about 350, and that is where the lows are. Break below that, 340 to 80 would be the next level on the downside. Will it go there? Hard to tell. On the upside, 380 is the level that I'll be watching this week. Break above that, we can go to 387, which is where we'll meet with 100-day SMA. Amazon is making new lows. If CPI data comes out and we see another pullback, this can go lower. Where would it go from here? Hard to tell, if I'm being honest, because I did not think it was possible for it to go here. So the next level, let's draw some levels here. This was December 28, so we are right at the 91. We're approaching March lows, apparently. So let's see. This is one level. This is second level right here. Third. Fourth. There we go. So these are some of the levels that I'll be watching. Yeah, There you go. So where are we? There we go. So if it breaks 89, then the next one will be 86, 84, 81, 50, 79, and then 74. Those are the level on the downside. Amazon is in steep, very steep downtrending channel at the moment. Broke out of this downtrending channel, so it's God only knows where it will go. We'll still be playing. It has the range that we like, and we need to make good trades on the option side. So we'll continue to do that. I will continue to add more on equity side in Amazon if it goes lower than my buy price of 89. Google, another one that is super, super low. It broke below this level from back in December 2020, and now it's right at this level here. So below that, I would expect it to go to 80.66. Right, that's the other level. Another one is right there. There we go. Those are the levels for Google on the downside. Again, CPI data will dictate how far low we can go in Google and pretty much any other names that are out there. Shop back in the range, as you can see, it did pull back, and now it's just moving in this range again. If it pulls back to 30, break below that, then these are the level that you should be watching in it. And I am not really trading shop on the equity side, I mean the option side, but I am trading it on the equity side. Apple, another name that is pulling back, but look at how strong it is compared to, look at Amazon chart, look at Google chart now, and look at Apple chart. It's still where at Google and Amazon are reaching, like Google is at about last year's November lows, no, the year before that, November lows. Amazon is almost near March 2020 lows. Apple hasn't even cracked this year's June lows yet. So a long way to go for Apple. That's why it's such a strong name. That's why it's industry leader. But one thing to keep in mind, when and if Apple starts to break, everything will come down crashing. So just keep that in mind. Netflix break over 200-day SMA, 100-day SMA is going up now finally. 50-day SMA is moving up. 200-day SMA is still down. It broke above it, almost touched 306 pretty much, and pull back from that point to now about 260. It should find some support near 250 to 49 area, and if CPI numbers are better than expected, then it could break below that. If it's worse, then it will finally start to bounce again towards the high. Gap fill is still possible, which is not until 330, but we'll see what happens when it reaches near 250. Meta, there is, I don't think there is any coming back for Meta anytime soon. We are now down about 77% from all-time high, which is a huge drop for a company that has that kind of size. So we'll see what happens. After this week, I may add some equity into it if it pulls back even further and that will be for like years long hold. Nvidia doing decent, pretty much moved sideways and pull back. 100-day, 50-day, 200-day, all are moving lower. The resistance on the upside is at 146 now. Pullback and support could be found at 128. That's a big range. 135 should also work as a support area. We have been trading in NVIDIA for quite a bit lately and making good profit on it. So I will continue to keep an eye on it and how it behaves in this range. But it has good momentum going on for it. Snap all over the place, not really interested in it. Tesla came back down, huge touch 203 and then bounced up, closed at 207. It opened around 223. It's near the resistance. So what everybody is waiting for pretty much in Tesla is for it to break this 203 and then 200 barrier. It briefly did that, so this 198 will be the next support level for Tesla, but if it breaks below that, it can move in free fall. Now the thing here is that Tesla army would get very, very trigger happy once they get to that point, try to buy it. So keep that in mind. Some local, like some quick trades may be possible and even highly profitable. So we'll see what happens. We did take some good trades in Tesla on the downside on Friday, made some good profit on it. So we'll continue to keep an eye on it and how it works out. Microsoft is still in downtrend here. On the downside, 217 and then 212, 213 should provide a very good support for it. Break below that, it can start to move even lower. Do we have, okay, let's draw some levels here. Those are the one that I would be watching. If it breaks below this 212, it'll be 209 and then 203 and then 200. Is it possible for it to go there? Absolutely. Octa still moving lower. TTD also lower after reaching the 75 highs, almost at 46 now. So I'll start to look for some equity plays in TTD. Billy is also down. China name. mRNA, can't believe the stock was trading at 400 not too long ago. It's at 158 now. FTNT, one of my favorite names, still isn't completely breaking down. It's still pretty much moving sideways. I still trust in it. I would still buy equity in it. I have equity in it. I will continue to add on any downturn possible. Lulu is another name that isn't having any big meltdown just yet. It did, as you can see here, 400 to 254 in a matter of a month or so. So that was a big meltdown. Here was another one. So I would expect it to have similar meltdown if the market goes. So I would be looking for like downside plays below 300 here. Costco, pretty much not affected by what's going on in the market at all. And that is what's so strong about Costco, is that on a large scale, especially when recession hit, everything's get expensive, Costco is the one where people flock to. So during the recession time, during the downturn, Costco's business is hardly affected, because yes, they will charge more, but the people will come and there will be more membership and all that sort of stuff in Costco because it sells things still at a wholesale rate. So that's why it's largely unaffected, and it could start to move higher pretty soon. So keep an eye on it. Fubo, not interested. RH, pretty similar thing. When you're thinking about possible recession on the horizon, you want to ask yourself which business are going to be resistant to recession. For restoration hardware, for example, Furniture. Do people need furniture? Most likely people will put it off. Like if I'm planning to buy something for living room, like I have a sofa and I'm trying to upgrade it, if recession is coming, I know recession is coming, I'm not going to spend thousands of dollars on furniture. I would rather save money. Whereas what would I do in terms of saving money? I would stop buying at a local grocery store, but I would go buy my grocery in bulk at a store like Costco, because they give me wholesale price. I save money on it overall. Another name, oil companies, Exxon, Chevron, all that. No matter how high the gas prices are, at the end of the day, people will still have to put gas in their tanks, their cars' tanks. There will be more electric cells, yes, but people are not going to just sell their cars and buy electric cars. Most people can't afford to do that. So the like the oil companies are continuing to make profit, or at least stay in the business for, like, won't be affected by it as much because of the recession. Same thing with names like Walmart. Like people will go to find cheaper, better deals at Walmart than Target or Albertsons or any high-end grocery names. Same thing with what was the other name that I had in mind? Electricity. People are not going to start turning off their electricity. Like they'll try to save money, but they're not cutting their connections and relying on, I don't know, sunlight, for example. So people will still continue to use electricity. People will still continue to buy home insurance, auto insurance. People will still continue to pretty much keep their phone connections. Nobody's going to think that, okay, I need to cut my cell phone line because I can't afford it. People are going to continue to hold on to this essential stuff. So when the recession is on horizon, those are the names that you want to be in. So those are the names you want to be in for long term, is what I meant. Anyway, so that is what I wanted to talk about today. Like I said, another big wig is coming in terms of economic reports. So just keep that in mind as you're trading. Take it one day at a time. There is no predicting what's going to happen. Nobody knows what kind of CPI data we are going to get. So it's just better to not predict, but rather react. And hope you guys are keeping that in mind as we move forward, because it will save you a lot of headaches. Anyway, that's all I have for today. If you guys don't have any question, I'll go ahead and end it here. Feel free to post your questions in the chat room, and I'll be more than happy to answer them. All right, guys, have a good weekend, rest of the weekend, and I will see you all tomorrow. Let's have another kicker of a week. Have a good day.